Trading the foreign exchange market carries high risk and may not be suitable for all investors trading on margin. Utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
We have a tentative Japanese red folder. I'm not sure what time that's going to be. We don't really know yet. And go to on Tuesday, a couple of red folders in the afternoon for Canada, in the evening Australia. So that'll be past our sessions, both of those. Wednesdays, again, some more tentative news for all of them. Not so sure what's going on with that. That's going to be near the end of the week and near the end of the month. And FOMC statements on Wednesday. Thursday looks pretty quiet, except for one US at 8:30. So there's not a whole lot of news this week, but it's a little sporadic and spotty. Let's check the FX book. And probably we have, let's see, this is April 26th. So that's where we are today. There's some high impact news around 8:30 with the US dollar. So we'll be careful about that. Durable good reports. Further down the day, we have some Japanese news around 3:30. And then tomorrow, again, some more Japanese news in the morning. That's going to be in the middle of the night. We won't have to worry about that too much. Nate may have to. And April 27th, consumer confidence. Like I said, it's pretty much going to be spotty. Keep checking these things out during the day to make sure that you don't miss anything at any critical times. I said focus on the red folder ones. Look at our heat map. We're going to look and quickly see what kind of pairs are strong, which ones are weak. And looking to me like the Canadian and Swiss are looking that we may be looking at that. The CAD's strong, so we're going to be trading to the strength of the Canadian dollar, to the weakness of the Swiss franc. And looks like the Aussie and New Zealand are a little bit on the stronger side as well. Dollar seems to be right in the middle, so any dollar pairs that we trade, it's not going to probably be real conclusive, but we'll take a look at the charts and we'll keep monitoring this as we go along. And let's see, coming over to the charts. Let me see if there's Eva. I knew she'd pop in there sooner or later. Bring her on over.
Good morning.
And there she is. Good morning. Good top of the morning to you, Eva.
Yeah, morning, everyone.
And let's see. Let's take a look and see what we have. Swiss franc. Remember, we just said the Swiss is the weakest of the pairs. So a Swiss yen. We're looking at. Here's the possibility. This is 30-minute. 30-minute chart. Move this thing over out of the way. And there's a 15-minute British USD. Let's take a look at that one real quick. Actually, that one doesn't look to be too bad either. Although the only problem I don't like about this one is that the British pound and USD are right about equal as far as their strength right now on all the time frames.
I think it's counter trend too, Al.
Is it counter trend? Okay, well that would explain that then. So, yep, it is. It's counter trend. I mean, we will. Let me go and put my moving averages on here and just do a quick look at this one. Let's see, template, load my template. Bring my moving averages up in here so I can see what I have. Yep, we have, it's not conclusive. Basically, we have moving averages going in all different directions right now. And it is counter trend. We had this little wick right here tells me that it's not done going, it's pretty much found some buyers right in this area. And so we're going to stay away from that one. And let's see, what was the other one we had? We had the Swiss. This one may be, let's bring the moving averages up on this one as well. Load. And this one looks like it's somewhat counter trend as well. And this is what the yen is. The Swiss and the yen are pretty much neck and neck. They're running for last. They're running for last place. So this is a lot of the same type of thing we just looked at with the British USD. It's in a counter trend. Now this one, I do like this one. The moving averages are in a lot better position. We have, they're all in the right position, except they haven't quite crossed the arrow moving average and the 62 exponential moving average haven't quite. The arrow moving average, it's the last one to cross the 200 moving average. So it does have strength to the downside, but it really isn't. I think we'll just hold off on that one as well. We don't have to be in a hurry to take trades on a Monday morning. That's about the last thing I want to be in a hurry to do. There's still a lot of position taking being set up for the week. And I still remember this is the last week of the month. So we can probably have some volatility come Thursday, Friday with being the last days. So we're going to pass on that one. We already looked at the British USD and let's see, we did like the Swiss and Swiss. Here's a British CAD. Let's take a look at that one. That's right in the zones. That's not seeing anything positive on that one either. We have the arrow, but the arrow came right down into the zone. So that one, we're not even paying attention to that one anymore. Let's see, what else do we have? 1 hour chart, British CAD. Let's take a look at that one, see what we have there. Move it over. Right now for the 1 hour chart, I can see it's right in the green zone. So that's not a trade on the 1 hour. Let's see, where's my template? Load my template. Actually, all the moving averages are pretty much in the right direction on the 1 hour. Let's go down to a 15-minute and see if it can break through. If it can break through this zone, we actually might have a little something here. This is how thick is this zone here? This is 72.40. Let's see, 72. We'll call it 72.50. This is a 20 pip zone, so that's got a lot of it's got a pretty thick wall to break through. Let's see, about 5 minutes, the wall's still there. So there again, I'm not going to take that trade or even look at that because it's already bouncing right at. It's in a downtrend. If it can break through this level right here, we may be able to have a little something, but even that is. I'm not sure about that one either. Where's the next level? The next level is not even showing on the 5 minute, but if we go to the 15 minute, we know we have this is a level on a level. It would have to break through. Let's see, this is on the 15-minute chart. It'd have to break through this level, and then we have another level right down below it, right here. And then we said on the 1 hour chart, it was there was a nice, pretty good zone right in this area. And British CAD, the British pound is kind of in the middle. I said the CAD's the strongest one, so there is some room to the downside, but it's got some chipping away to do at that wall before it's going to break through it. So we'll just keep our powder dry for right now and keep pressing on. Any questions so far?
Seems to be all good.
Okay, good. Yeah. Yeah, just the moving averages that I use on this, I basically have several of them here. The blue one is the arrow moving. Now that's one that's defaulted on the program. So that one always pops up with the charts. We've added the 200 moving average which is a pretty much a good indicator about whether or not it's going to be switching directions. The other moving averages I have, the green one right here is a 5. All of them are exponential moving averages. I'm not sure what the arrow one is. That's part of the program, and that's part of the, I guess you'd call that the secret sauce. It is moving average. What the exact number of it is, I'm not at liberty to say or free to say. The green one is a 5. The yellow one is a 13. And this orange one is a 62 exponent. They're all exponential moving averages. I really like the 62 for direction. I like to see all of them moving in the right direction. I like to see the fastest one being first, the 13 being second. The arrow fits there in between the two, the 62, and then these. And when they're all moving in the right direction, and I don't have any zones, I feel pretty comfortable that I can get my 5 or 7 pips out of that, especially if the heat map that our strength meter shows us that we have a nice split between the two pairs that we're looking at. It's if this one's strong and this one's weak, and I have a formation that looks like this with no zones, I'll jump on that every time. It doesn't always win, but it does win enough times to where I usually will take that trade. Let's see, anything else that's popped up here? We have another 26 seconds before we may have another 15-minute. Just so you know that on this dashboard, they have the minute tells you when the next candle's, when the candle closes and new one pops up. So right now we have 19 seconds for the 15-minute candle to close, which is going to be the same time the 5 minutes going to close. So we'll see what pops up here in the next 30 seconds. 2, 3. There we go. We just had a candle close. We've got some new Eurocad. Pull that one up. There's a Euro is Eurocad. That's a possibility here. That one looks pretty good right now on the 15-minute chart. Let's see where moving averages are.
Counter trend.
Counter trend. Okay, thank you, CV. All of our moving averages are in the right direction except for the 200. They're not, but there's no zone right here. You see how much room we have here, 27 pips. And I will come over here and see if the CAD's strong. The Euro is on this 5 minute. It's still weaker, 15 weaker yet. So 15 and 30-minute charts, so it's about the same. We do have a 4-point spread on that, and we have a 4-point spread on that one. I'll go with I'm going to go with a sell stop right below that, the wick of that where the arrow is, and that's at 150.34. And so I'm going to put my cursor right here. I'm going to right click, trade, sell stop. There's my sell stop. And we're going to put that right at it is contra trend, but I'm not going for the full 20 pips on this one. And we're at 132. I can probably go with a little bit. Let's see, 130. I'll go with 130. Yeah, 132 looks pretty good. Take profit. I'm going to go for 5 pips. So it's going to be at 50.27. 27. And we're going to go for a 15 pip stop. So I'm going to put that up to 47. Modify it. Here's my stop. Here's my target. Here's my entry. I'm going to bring my entry up just a little bit here, if I can. Just a little bit. Gonna look at my 5-minute chart and see what I've got here. Well, the 5-minute chart, it actually looks pretty good. Let's see if there's anything over here that's will cause us some problems. Let me pull this up on my trading views. That might be a little bit easier to read it. If I look over here where my target is, I can come over here and see. Now it's going to probably have to get through this little wick right here. That was a strong candle up. It did break this wick, and now it's kind of coming into this little zone right in here. So that could present a little bit of a problem, but if we can get a nice pullback, it may just zip right down into and just hit our target. But right now we're not in this trade. We're just sitting there. It's a pending order waiting for it to break out the bottom. And let's see, this is the Eurocad. And let's take a look at this thing a little bit closer. Here's my Euro, here's my trading view chart. And we're going to go with a 15-minute chart. See where we are with it. Spread this out and see. I'm coming over here. I see this nice little big extended range candle came up. Here's a little red. There's a rally. It based, rallied, came back down and retested right here. It already broke through the retest area. Remember, our entry is here at right below this wick, right around 30. We'll just say 32. I think I has where I had it. This would be a buy entry. And if I come over to the left, I can see where this is that little rally basing. So if this base doesn't hold, then we're probably going to come on down lower. So this is the area. This is an area where it's got to get through this little bounce right through here.
Judson says that this looks like it's hit a previous support zone.
Well, yeah, it did. It came back down. I say, what? This was where here was a strong move up, came back down, retraced, found some buyers. Actually, found the buyers right in this area, right in here. And so the buyers came in. So this whole area, now it did break. It's coming deep into this zone. But once it can break this, if you look at all these wicks over here, it's pretty much going to have to, there's a good chance it's going to have to break through the bottom, which is right here at about 50.25. And if you remember correctly, I think we had our target was at 27. So here's where the target, so here's our entry, here's our target. And so that's what we have on that one. But right now we're not in the trade. And if it just pops on up and just, my thinking is with this one, it had a nice strong move down. It based a little bit, broke out of the base, but it's right into this area. So this could be a little bit of a head fake, but like I said, we're not in the trade yet. We're going to wait for it to break through the bottom, and our target's going to be somewhere. Now, if it can break through the bottom of this one, then we have a nice little target down over in this area. And here's where the next level would be. Well, these little red, these nice little red candles in here. So that's the analysis of it. So we do have this little bit, and this is the price on the bottom of this zone is and that's at 31. So if it comes down and if it can break through this area, we probably should be able to get a little bit, should be able to get our fill. If it comes down and breaks just short of my target, then I'll probably bail on the trade. We'll see what it does. And this is the Eurocad. And I'm still not in the trade yet. But I'm not seeing any zones at all. And as long as the where's my heat map here? as long as this can keep a nice, as long as I can keep a spread to where, now if this euro comes on up and tags this and comes back down, that's just a retrace, which is pretty much what it's doing right now. You can see the euro is getting just a little bit stronger, but can't quite break through the top. Still have the strength on the higher time frames to the short side. So again, we'll keep an eye on that one and see if it breaks through or not. Let's see, anything else? Swiss yen. Remember we said the Swiss was weak, but so was the yen. So again, that one, we're going to keep away from that. Here's the arrow. I'm going to mark the overnight low on some of these here too. The overnight money zone. Here's where the arrow was on the 30-minute, and we'll check the lower time frame to see if there's any zones in front. If we look on the 30-minute from where the arrow is, now this again, this is contra trend, which is, I believe, CB pointed out, 4 green on the bottom, 2 red on the top, so it is in an uptrend. I'll put an up arrow right here so I know where my uptrend is, and looking at the distance, we have 23 pips too. So that from a pip standpoint, there's enough room, but it is contra trend. I'd much rather see it come down like this one, came down into the zone, came back, gave us an arrow to the upside, which is what it did during the middle of the night. There was an arrow right here. And then this probably gave us our 20 pips. Yep, we had 30 pips to the upside before and it's probably looking at that, but then it formed this zone right before. And it bounced off of this zone. So this was as far as it went. So right now it's range bound between this area. And if I measure between the two zones, if I have 50 pips, it's tradable. If it's not, there's 60 pips. So it is a tradable zone. But I would like to see it more. I'd be more apt to. I just don't like the idea that it's the contra trend right now, and the strength of between the two currencies is not all that that much different. So we'll stay away from that one. Looks like we just got filled in our Eurocad. Yes, Eva.
I was just going to say that it was put in the chat about the Eurocad.
Oh, I see. Okay, yeah. Let's keep an eye on this one. So we're on a 5 minute. Let's pull it down to 1 minute to see what it does on a 1 minute. See how things are looking here. We pretty much analyzed all the others. Nice. We're only gone for 5 to 7 pips on this.
I do have a question though in the Q&A.
Okay.
Eric wants to know if you have any tips on how to get the alert box to the left. Like he'd like to get it the way you have it instead of using the blackout on a chart screen. Now, I'm not sure what that means, but he says his is also so small, it's almost unreadable. Just whenever you can let him know.
On the dashboard, you mean? I'm talking about the dashboard?
Yeah, you know how you've got your alert box up on the left like that? I guess he's having difficulty getting it. You
mean the whole box here?
I'm really not sure because instead of using the blackout on
basically, basically
have that.
Oh, go ahead. Well, basically, when you load the chart, you just pull a chart, you pull a pair up, and you right-click on the template, and you find that where it says blackout. You do the blackout, and then you load the dashboard onto that template. And this is all by default. The size of the fonts are all default, and then just a matter of what you load into your into the properties list, which one of these you pick. Now, the more you pick, the more you're going to have on this. And so you may have to scroll all the way down just to be able to, I mean, I've got mine down. I've got about as many on here as I want, because if I go much bigger, then I'm not going to be able to get all my, already missing some of these over here because But this is pretty much all by default. You just pull up a chart, get the blackout screen, and then you load your navigator, your dashboard off of the expert advisors arrow dashboard, and then just click and drop that over there, and then you then just fill in the pairs that you want. And the other thing is to make sure that when you do this, you take this template for the new chart and make sure you put arrow in here all in all capital letters, and then click OK. And then you should come up just like mine. Just you have to just decide which set of these you want. If you want to just put, I have my own pairs and I just added the other pairs, but you can just take the core pairs or whatever pair you want. And right now I'm in the trade, and it is somewhat, see, I'd like to be able to see where my charts are, where things are, where my trades are. So I'm going to pull this up a little bit. I'm going to lose a couple of, lose the Bitcoin and the US 30, but they should pop up on the alert tab here if they come up. So I have the little alert tab right here so I can see. Sometimes they don't always come up at the same time. For the most part, they do, but sometimes it just seems to be a little bit off a little bit. And British Aussie. So like right here, I've got a British Aussie pair on the 15-minute.
Do you have nothing on that?
Nothing on the chart, but it came up on the alert. Don't know why that is. There's nothing on the chart, so I'll take that one.
Yeah, there's no arrow on the chart either. How?
Yeah. So.
Oh, you know what? That was from before.
Was it?
It says time there is 9:14, so it would have been at 7:15 this morning, I guess.
Okay. Well, there was an arrow there.
See the difference in times.
Over here.
59.
Over here, 9:14.
Yeah.
9:14. That would be 2:14 in the morning. Yeah, that would be chart time at minus 7 hours for me for the East Coast. This one's starting to work its way through here. The euro has gotten stronger, but it's still kind of bouncing around here right now. It's having to break through that zone that we identified earlier. That's where let's see if it can come down and pick it up. Let's see the Eurocad. Let's see what the spread is on this. Eurocad spread 1.6. So as long as it's under 2, I'm okay. I like seeing it less than 2. If it gets up to 3 or 4, like even like this British CAD, that's up. Well, it was up to 2. Here's a 3, like the Euro New Zealand. That's got a 3-point spread. So there, you'd have to increase your target because, again, you have to get your spread taken care of first. It gives you worse fill and the worse exit. So. And right now we're at, let's see, check my pips here. I'm right clicking here on my profits, right click, go to the profit, go to points. I like seeing how many pips it is right here. So plus you also have the pips right up in here. So you got 2 spots, you can look at it. As if this price comes down onto that that red line where the target is, and they can't quite, basically we need this red line up here to come all the way down to take me out. That's our spread right here between the red and the white line. That's our spread. So if the tail of the candle just comes down and tags it, it's not going to take you out until the red line comes in. That means it's got to break all the way through. Came right down to that line and rejected a little bit. So see if it can hammer its way through right now. Right now it's below this green moving average line. I would want to see if it comes. If it comes all the way up and tags this, then I'm probably going to want to be out of the trade. But I'm going to keep on watching it, make sure just to see. Well, I can sit here and watch it. I can leave my stop right where it is, and we'll see if it can get me out. There's 3. So that's to cover the spread. Here's another little push down. There we go. There's our target. First trade of the week. Done.
Nice way to start the week, Al. Good work, man.
Yeah, thanks. And if again, like I said, when you're if you're going for 20 pips or with a 40 pip stop, you want to be with the trend. A lot of our trading right now we find tends to be contra trend because a lot of times it's coming out of the London session is pretty much the London session is pretty much right at their lunchtime. And the New York session hasn't started yet. So a lot of our trades that we see are contra trend. I say probably the majority of them are probably contra trend. But if you can get everything moving in the right direction on a lower time frame and just go for your 5 or 7 pip target off, even though it's contra trend a lot of times, but I want to see all my moving averages be in the correct direction. And I want to see all my strength being in the right direction. If I get both of those, I'll go for 5 or 7 pips, and don't always win them all, but no, sometimes a good bit of the time we do. So as far as I'm concerned, that trade is done until the next time it comes up. Now, if you want to go for more pips, you could probably still do that, and you wouldn't be. I could not fault you for it. There's probably more room to the downside. Period. Today's the 26th. Let's see, that was the Eurocad. Let's go back to the Eurocad again here a second. My Eurocad charting over here. You can see where this was the zone, and you see it's coming right down. It's right at the bottom of the zone. My target is right here in the middle of it. So now if it breaks through this zone, there's room. There's another strength to the downside, or to the downside. This would be the next area that I could say could be looking for a target. So I'm just happy with my 5 or 7 pips consistently. There's another looks like there's another 9 pips down to this zone. So it could, if you want to hang in there, I wouldn't fault anybody for doing that. But also keep in mind that you may get a retracement back into this little area. This zone's still holding, but you also have this little area right in here that could give you a little bit of a problem. This is a little bit nice little barrier between your stop. There's a nice drop, a base. So if it comes, if this area, if it can't break through this, I would expect you're going to see another retracement back up into this area right in here. Now, that's a quite, you could have also taken a position out. If it pulls back up into this area, you may want to take another position at it, and there'd be nothing wrong with doing that. Right now, all this has been chewed up basically, all the way down to all these wicks are right here. All these buyers that came in right around this area are about all done. Now the next set of buyers I'm looking at is going to be down here in this area, right at here's the wick, here's the body of the candle, here's the wick. So I'm putting it right down at the bottom of the body, and I'm looking at all these other wicks to the side, to the left. Here's a wick. Now there is a little bit of a body right here. So this would be the next zone that I'd be looking at. If it can break through here, it's probably going to come going down and be looking at this area as a supply zone. Let's see. Or demand zone, rather. Excuse me, demand zone. And there is strength, and there is some strength to it. I always like getting my first trade under my belt right off the bat, and then I can play around with some more later on. And so here's a Euro US. Let's take a look at that one. Right off the top of my head, it looks like it looks pretty good. See where my strength is. US and the Euro are right in the middle of the 8 pairs, so there's no real clear direction off of that. This was the top of the money zone from Friday. This is Friday's area right in here. There's the money zone for Friday. So that's the top of it. Over the overnight, kept on going up. Now it's retesting the top of this zone from, and the money zone here is right there. And it is breaking the, if we're looking at the overnight low versus the overnight high before the money zone, we're looking right now, we're starting to get a little bit of a breakout of this area right in here. That's the low. Here's the money zone. This candle broke out of the money zone. This could possibly be a trade based on that strategy. Now that's on a 30-minute chart. Let's get it back on a lower time frame and see what we have here. Euro US, Euro US. US is getting stronger than the Euro. I actually kind of like this one for a money zone breakout. It's a little bit late, later than you normally see it. Normally you'll see it pretty much right as it hits the London session. And let's see, we got our moving averages up here to see where they are. All of our moving averages are in the correct direction, except for this one right here. But they all, my major ones have all crossed the 200 moving average. This one's about to cross. Get a little bit of a pullback again. This one might be a possibility of a, let's see where it is trend-wise. We have, again, we're in an uptrend. This would be contra trend. Show the up arrow right here. Here's the trend. Here's the 15-minute. There's the last zone of the 15-minute chart. Let's go to a 5-minute chart. See what we have here. I said we did get the money zone breakout on this one. It's got lots of room to the downside, it looks like. There's 20-some pips. Got the crossover, the moving averages. We have a zone way down here. Here's the first zone. This is on the 5-minute chart. Actually, we had an arrow right in this area. That's 40 pips to the downside. We had the money zone breakout. I would say we could do another sell stop on this. Trade, sell stop. And we go with modify it. And we'll put, looks like it's at 79, so we're going short. So take profit is going to be 79 minus 5. That's going to be minus 5, so 79 be 74. 4, and this one is going to be, call it 80, 95. We'll call it 95. Modify it. Not in the trade yet. We'll see what happens when this pullback. If everything still looks good when it starts approaching my line, we'll let it go. If not, we'll pull it off. Right now, the dollar is still kind of right in the middle of the pack with the euro. I'm not really a big fan of this one right now, but we'll see what happens here on this pullback. And let's take a look at this on the trading view, Euro-US.
When you have a moment too, Al, there's a question. What do you think of the CAD Swiss? We don't have an alert.
CAD Swiss.
I guess
well, I like it as far as the strength goes. Let's see what it looks like on the. Well, it's already pretty much way out of the chute. You can see where it would have to break through that zone. Yeah, we got this zone we'd have to break through first. If it can break through that, you have 17 pips to the upside to the next zone. Trading it with the strength of the CAD. I like it. I like the direction of it. I don't like the zones that it has right now. It would have to break through that zone right there. Let's see what we have here on the higher time frame. Here's our overnight. Now it did break the previous day's money zone right here. It certainly has room to the upside, but I said we'd have to get through this. I'd like to see it get through that first, and that's probably 8 pips up down the road. I think it's kind of out of the chute already. I think I would much rather had it off the bounce down here earlier this morning. I would like that a lot better. I don't like when you get these levels on levels like this. There's a good chance it's going to break through the first one, but I'd have to have my target. I'd probably want my target a little bit before this zone. If this breaks, it's probably going to be heading up to that one. There would be room for a quick scalp on that, but I don't know if I'd go much more with that. Just the fact we haven't had the pullback yet. I'd like to see more of a pullback coming in, maybe retesting the yellow line or the blue line, have a nice strong pullback, and then I'd like to see it break this zone, pull back, and then make an attempt to go up here. From a trend line standpoint, on this one, we're looking at, I'll probably take it to the bottom of this first green zone to this one, draw my trend line. And so right now, it's pretty much following the blue moving average, where we don't really have any real. I'd probably have to go with this sort of a trend on this and wait for it to, if it breaks through that, I'd like to see it pull back first before I try jumping in. A breakout like this one, oftentimes you get trapped. So that would be my analysis on that. Let's see what we're looking at here. We're looking at the Euro USD. Let's do analysis on that one. Euro USD. I'm over here. 15-minute chart. You are getting a bounce off of this moving average. This is my 62. No, this is the 30-minute 62. This is basically a bit on a 30-minute chart. You can see it's coming in, bouncing right off of that. This is where we have our entry right to the bottom here. So I really don't like, if I'm going to pull that trade, I don't like the way this thing's looking. I'm going to close this one, modify. I'm going to delete that one. I really don't like the way that, as I do a further analysis on this, I really don't like the fact that it bounced off of this moving average. They are kind of in the right direction, but it's having to a little bit of a problem getting through that. I would much prefer to see it coming on up to this trend line. So we have a little high. Here's a trend line right here. There's our trend there. Whoops. Now it had a nice move up base. When it came back up, this little pullback tested this one. You can see where it didn't hold below here. Came back up, started forming the trend line, and now this one got broken. But we also, so right now, this is going to be my second hit off of this. So now we have a trend here. Now I want to see this thing pull back, and then if it pulls back up to this area, if it can pull back up, break the trend line, come back and retest the trend line, then we have a trade. But right now on this breakout right now, it could very well head fake us. I view this one as a strong possibility, but still a little bit more on the iffy side. Here's the origin of this move, came back up here. So here's the origin. Let's see what the trend line is over here. This is actually forming a bit of a harmonic on this one here. And for those of you who don't know what I mean by that is we have this strong move up. Came all the way up here. Pulled back. Came back up, formed a lower high. And now we could be, this thing, if this thing breaks, it's probably going to end up coming down around this area. I want to see it break this trend line. If it breaks this trend line, we could get a little bit of a fake here, but it breaks, comes back up, then we could maybe take it, and then we could have a little tighter stop up around this area. Here's kind of like your M formation. Here's your left shoulder of the M. Here's the middle of the M. Here's the right shoulder of the M. And now we could start getting a little bit of a trending on down to retest this area. This is the origin of this move. This one got broken. Origin of the move, pulled up, retraced, made a new high, tested this area, came back up, formed our high up here. And now the fact this got broken, and we have all this over here, this is probably going to be the area where it's probably going to be, if this trend line can break, then we could very well have a trade to the downside, and I'll be looking at this area over here for the target. And we move this to a 5-minute chart. Let's see how this thing looks here. Here's a drop, here's a base. Here's a drop, retraced. I want to see it, oops. I want to see it retrace back up to, let me just do this here. Let me draw this again. There's the drop. Came back up into the moving averages, but I want to see a break here first. Tried to break, couldn't close below it. See what it does here. But we have a little bit of a wedge right on this area. There's a high, oops. There's a high, here's a low. Flatline it here. This is about where we had that entry. Let's see how's it doing on the other part here. Euro USD, it looks like the dollar may be getting a little bit stronger. See, it's still pretty close in between here, so this could be a head fake. And I said it's just best to stay away from the trades like that. They may work out, they may not. Don't really have an arrow here. We had the arrow way back here. That was several minutes ago. 15 minutes, no arrow still. There's something that's not right with this one. Questions? Let's see. Let me check your question box here. Is that a Bollinger Band on the charts? No, that's not up. I generally do not use Bollinger Bands. British US strategy 8 bounce. 8.1 is 61.8 bounce off. That's SPF Fibonacci. We could take a look at that in British US. We can take a look at that one.
Al, I don't see these things that you're reading out.
Maybe they're. Oh, those are probably ones that were already. I think these are ones that were already answered, I guess.
All right, you look under the open tab in the Q&A.
Yeah. How did I learn so much about trading? I went to the School of Hard Knocks. That's where I learned most of it. No, seriously. Yeah, but I mean, that is kind of serious. But there's some, I've just been studying charts for the last, since forever, I guess you could say. And there's a lot of books out there. There's been some courses that I've taken. There's some mentors that I've worked with, some teachers I've worked with, and just sort of learned from that. Just took the things from people that I value their way of teaching that resonated with me, and I just sort of like found the ones that the tools that they use that work for me, and just sort of developed what I've done, and this is kind of what I've settled with. I'm still learning. I'm still always learning. I just say always a student.
Yeah, it's good to see all kinds of different strategies that different people have, because we're not all the same and we don't all trade the same way.
Yeah.
When something resonates with you, then that's what you'll end up sticking with, and that's going to be successful for you.
Some people are swing traders, some people are day traders, some people are scalpers, and they all work, but you have to find out what fits your personality. One thing I'm finding out for me, I like getting in, I like getting out, I like taking higher positions. So I'm not really risking anymore, but I'm just I'm taking higher positions with tighter stops, and I just but I use different time frames. I usually my main focus time frame is usually the 15-minute. That's my focus time frame. The only thing I look about like this move right here, I see this strong move up, and I'm seeing that it came back down and across the arrow moving average is the blue one. And I'd like to see it cross that and then give a little retrace. So right now I'm looking at this thing is trading. Whenever you're looking at a chart, if it's trending on one time frame, but it's going sideways in another time frame. So I usually try to find out what time frame is it going sideways in, and usually you can find a pivot low, pivot high, and that's really kind of what I call your playground. So this was a nice strong move up. So, and if we look and see where the trend is up. And this is the area where it first left. That's where the last zone was formed. This is where the next zone was formed in the opposite direction. So I'm going to draw a Fibonacci from here up to here. And so right now I can see that it's in that critical zone right now. Now the fact that it is coming into the 61.8 retracement, I'd be looking for it to start bouncing off of this. But I also have another Fibonacci where as we're looking from here to say this move, we're across this moving average. Let's just redraw this. So this is a critical line right here. This is a critical line. This is a critical, see the 38, 50, and 64. So let's go and we'll draw this. And Eva, you can help me out here if I'm saying something that's not what you and I talked about.
Okay.
Okay. So there's the 38, here's the 50, 61.8 retracement off of this move. Let's pull this one off. And I'm going to delete this. And now we're going to go and reverse that position. So right now, if we look at a Fibonacci from, this is the candle that left the zone, that formed the zone. This is the last candle that left that zone, and we're going to pull it down to here. So I'm going to, we pull it down from here because I'm using this because it crossed the 62 moving average. So I'm going to take it from here to here. And keep in mind that we have the higher time frame, which is for the bigger move. We have this blue line right here. So right now, the way I'm seeing this thing is that there's a good chance that this thing is going to cross and tag this moving average right around in these three zones. Right now, we actually, well, as we had this one come down, it crossed, it tagged here, closed below that, and now it's starting to challenge this higher time frame 61.8 moving average. We can move this thing down a little bit lower. And now this is a strong move down. Actually, I'm gonna move this thing over. I'm gonna keep it right there. I'm gonna keep it on that. Because what we're looking at this as being our target right now. So as long as this thing can keep on closing below these moving averages, it's probably going to hit this line. If it can close below this line, it's probably going to hit this line. This is a little bit of what Jackie was, this is kind of Jackie's method of using these moving averages. This might be a little bit of a modification to that, but this is what we're looking at. This is the target, the higher time frame, 61.8. That means that this move here is being retraced 61.8% of the move. Usually after a 50 or 61.8 retracement, especially if you have a moving average that's sitting right here, it's probably a good chance it's going to bounce off of that, and then it's going to probably retrace eventually to get back up to where, if this is still in an up move, which right now we see that this is an up move because we have the up arrow right here. That's a little bit how I use some of these Fibonacci's. I want to see how far is it going to pull back, and where's my target going to be based on the contra. This is a contra trend move right now. Here's the trend. This is the impulse move. Here's the correction move, the retracement move. Comes back when it gets done with that. If it's in a continual uptrend, it's going to come up and retest this and maybe go higher. Or if this is where it's going to be reversing, it's going to come up, retest this probably at a lower price, and you're going to have a trend reversal. if it can't make it. So when this thing comes back up, if it can't break through this pivot right here, and it's going to have to be looking at seeing where the price is. That would mean it would be making a lower high on the retracement. That would be a signal that this thing may be starting to change direction. Right now, all my moving averages are almost, not quite, in the right direction. I'd like to see this blue one get below the orange one. Then they would be all in the right direction. But right now, they're not quite there. This is still a pullback. By the time the price gets down to this line, there's probably going to be a good chance it's going to be crossed. Here's our trend line up here. Here's a high, here's a low, here's a lower high. Now we have a lower low. This is a strong move. And here's these two, this is the left shoulder of your M. Here's the middle of the M. Here's the right shoulder of the M. Right about where that dot is. And now I can see where it's coming down and start making your V's all the way down to here. It could come all the way back down, but right now I would expect a bounce off of this.
That's your 200. Is that right, Al?
This is the purple one is the Exponential 200 moving average off the 15-minute chart.
Yeah.
Now, if you come down to a 5-minute chart, these numbers, remember, these are time frame chart sensitive. So this is, you see that this point right here is a 200 moving average on a 15-minute chart. Now keep an eye. Now when I change this to a 5-minute chart, you can see that that 200 is way up here now on the 5 minute. So right now on the 5-minute, this thing is in a trend down. You've got all of our moving averages are in the right direction. 62 crossed the 200. The arrow moving average is below the 62, the 13, the 5. Right now, they're all moving in the right direction, and to expect this to hit a target down here is not totally off the realm of possibility. Which is, this one is the 62 retracement from that big move that we had off to the left. So you look, this is where you're using the multiple time frames to analyze. You look at the target areas off the higher time frame, and then you see if the lower time frames will help to finish the story, so to speak. And so right now, there's no reason to be thinking that this thing's going. Now, this thing, I would expect to bounce off of here, and it's going to probably come up and retest this. But here is your M. Here's the first drop, pull back. Extended range candle, pull back. Extended range, pull back. So this is your 1, 2, 3, 4, 5, 3. I'd say this thing's probably just about to the end of this strong move down. This is, as you see with this move here, this is like one big move off a 5-minute chart, but you can see they have little pullbacks in between. And then you're going to probably get another series of pullbacks going up in the other direction. There would be a pullback, and then you probably have a little bit of a retracement. Then you have and usually these go in, the retracements usually go in about 3 waves. Pullback, there's wave 1, wave 2. This would be like an ABC wave here. 1, 2, 3. ABC, and then that would bring us right about up to this level. And then you may get a retest down to there. And here's your W. Strong move down, then your W would be like this. Look like a W. There's left shoulder, middle, a little bit of a pullback, comes back and retests. And then when it retests, you have a little trend line that's a little bit higher, and then it will be looking, then it's be ready to go to the upside. Now this thing could pull all the way down. And we don't know where this thing's going to stop right now, but I'm going to be anticipating it to be stopping right about here. And pull back to probably this level. Pull back. This is a pattern that I'm looking for. I'm just projecting. We don't know what it's going to do, but this is what I'm kind of looking for right now. There's your W as it's bouncing off of some zones right here. A little bit of technical analysis there. You know, years ago, it used to be always, it was all about fundamentals, what the earnings reports were, but I mean, we don't really have earnings on currencies, but it all fits the same, is that the institutions trade with certain price levels, and price levels tend to draw and form patterns, and it's pretty consistent. And that's where the technical analysis came in. We're talking back in the days before the computers were a household name. And at the time, it's just like people thought that technical analysis and charting was just a bunch of coincidence. And we're talking like back in the late 70s. And we're at the point now where everybody is pretty much geared towards the technicals, and the fundamentals just basically, the technicals tell the story that the fundamentals are going to tell you, but the charts will usually tell you before the news comes out. That's why it's so important to understand technical analysis, in my opinion.
I agree with you. You can see the patterns that just keep doing the same thing over and over and over again after a while.
And you have to train your eyes to see the patterns. I mean, when you first look at charts and you're not new at trading, everything just looks like a bunch of squiggly lines. But if you start focusing on, and as you sit in this room and watch how we draw these things, your eyes are going to start seeing it. Your eyes are going to start picking up. It's not going to be something that's going to happen overnight. Right now, a lot of times you say, how does he see that? Or why is he picking that point versus the other point? But eventually you'll be able to start telling me, say, hey, take a look at this. I'll say, yeah, there we go. That's what we're looking at. That's what we're looking for. So
what does Brian call it? He calls it order and chaos.
Order and chaos. There's order and chaos. Exactly right. And that's pretty much, like I said, but you start training your eyes to see these things. And you're not always going to be right. And you're going to be seeing things that, and your mind, but you want to train your brain to be consistent in the right way. And that's one reason why it's very dangerous to be saying, oh, let me see what happens. Oh, I'm in demo. Let me see what happens here. Oh, I'm in demo. Let me just try this. Because what you're doing is every time you do that, the worst thing that can happen is you do something that isn't part of a plan that works out because your brain says, oh, this works. So then you go and you find out that you're really starting to train your brain to take a look at things that really aren't so. And so that's why you have to be very careful about. And so if you are in demo, and demo is good for learning a pattern, learning a technique, so you're not putting real money to it. But you have to be very careful that you don't just say, well, let me see what happens if I do this, or let me see what happens if I do that. You have to figure out what technique you want to trade, and then trade that in demo, but trade it as if it were real money. Because what you're really looking for is you're looking for that consistency. And it drives me crazy if I start getting careless and I blow up, even if I'm in demo or otherwise, because what really matters to me is the consistency, not the money, but the consistency. You have the consistency, the money will come.
I used to have one of my trading instructors at OTA used to say to me, practice makes permanent. It doesn't make it perfect, but if you keep practicing the wrong thing, then you'll permanently be doing the wrong thing.
That's exactly right. So be very aware of that. And there's a human tendency to do that, is to not to vary from what you want to be varying from. Is a very common problem with traders. So understand where the pitfalls are, and you'll serve you well. Know what the human limitations are with these things, and just remember if anybody finds the Holy Grail, let me know. But I haven't found one yet, and I've been doing this a very long time. But all you can do is it's a series of probabilities.
Yeah, no strategy is 100%.
No.
It can be very close to it, but it won't be 100%.
And there's some times where I'm trying to work out a strategy, and in fact, you may even see it in some of my results here on this. This is my demo platform. I do some trading on the other one, but this is my platform that I'm looking at if I'm working out a Fibonacci strategy, if I'm working out. But you'll find out that sometimes, like I was working on the German 30 the other day because I haven't traded this that much, so I was working out a Fibonacci strategy with that, and I think it's one of the indexes that I do like, but I haven't quite figured it all out yet. So the only way to figure it out is to see the setups that I'm basically looking at, and then trade to see if it works. If it doesn't work, then you need to modify the strategy. Even like for this one right now, here I see the strong move up, and if we look at, I'm on a 15-minute chart. That's my focus chart.
Actually, Al, we have a request. Can we maybe have a look at the British yen while you show what you're
British yen. Yeah, we can do that. Again, I'm going to start with the 15-minute chart. Just blow this thing up. And we're going to see what the direction is right now. Right now, I'm looking like it's going to be in an up position or an uptrend. I may be wrong. Right now, it's showing we have 1, 2, 3, 1, 2. So actually, it's in a downtrend. Now, this will be an interesting, since I don't know exactly what my moving averages are doing. I'm going to mark this in a downtrend, but I have a suspicion that the moving averages are going to tell me that's in a downtrend as well. Let's see if it's true or not. So arrow, this is a downtrend. Okay, let me expand out. And let me put my moving, I'm on the 15-minute chart. I'm going to bring up all my moving averages. And if my 200 moving averages is showing the same direction, well, it's kind of flat. Right now it's flat. So I would say that there's no real clear direction on this one right now. We have the 200 moving average. You can see it's pretty flat. We're starting to get the crossover of the other moving averages. So therefore, there's no real clear direction on this. So even though we have a down arrow, there's no real clear direction. And if I look, let me move this over into my trading view. We'll put this one up. This is the British yen. British yen. Find my... So here's the British yen. And we're going to go to start with the 15-minute chart. And right now, when I'm looking at this, I'm looking to see where is the range that it's been trading in. So this is back on the 21st. That was last week. See, let me see here. I'll tell you what we're going to do. We're going to go to a daily chart. and see what it's been doing, see where the ranges are on a daily chart. Now I can look and see here's a nice pullback, here's a high, here's a pivot high, here's a pivot low. So right now, from a daily standpoint, it's trading inside this range. This is the method I usually kind of go. I try and find out where it's going sideways, because then I try and find out how I want to trade it inside the box. Here's the box. And I just go to where I see where the price is now and where a significant low is, where a significant high was, and now it's trading inside this range. So this is my this is what I'll call my playground. Now I can go to a lower time frame. Now let's go back to an hour chart and see what it's doing. Let's take these off here. And I have all my moving averages here. So right now, I'm looking to see, again, where inside that box was there a significant high and significant low. Well, here's a significant low. Here was a significant high. And so if we're looking at from a Fibonacci standpoint, we're looking to see that it's probably trending. Well, let's see. Here was, oh, I just moved my box. Let me get back to, I go, one thing about it I find out if I grab the wrong thing, it changes it. So I got to lock the box there. There we go. But right now you can see from here to here, we have a pullback. And if I draw a Fibonacci from here to here, I'm going to probably find out I'm going to be below I'm be in the lower 25% of this box. So I'm going to draw my Fibonacci. And I don't mind doing this type of analysis on like today because it's Monday. Actually, we already had our winning trade for the day. So, and we're not getting a whole lot of other alerts, but keep an eye on the alerts if you would, anybody that's in there.
Yeah, I'm watching.
So I'm going to draw this. This is going to be my higher time frame. So I'm going to, let's see, I've got an arrow higher time frame. So here's my higher time frame. I'm going to lock that. So here's my, this is my sideways, it's going sideways inside the box. But you can see it's really trending inside there. But my extremes of the box is right in here. And you can see that this price right here is in the lower 25%. This one came up, couldn't quite make the upper 25%. But this is really the area that I'm concerned about. I want to be, right now, since it's inside the box, I'm going to be looking at taking it long down here. And we're going to call this our demand zone. And when I'm just looking around, this is pretty much what I do when I'm just looking around. I go to wherever I can find out where it's going sideways, then I start finding out what's the trend inside that sideways range. And so here's the supply. So this is the area where I want to go sell up here. I want to buy down here, but we want to find the right spot. So remember I was saying earlier where we note these. Now I'm going to have a different color on when I go to a lower time frame. I'm going to go to 1 hour. So now I'm looking to see where is the big move down, where is the retracement. I look, this is a pretty strong move down. This is a retracement. And now you see where it made a new low, but now it took out this high. So right now, and it also bounced off of this area right here. So now the question is it going to start breaking through these zones to the upside? It crossed over my moving average. This blue moving average is the same one as actually this is a 30-minute 62, but that's okay. It broke that. So strong move down, retracement, made a pivot low, and now it looks like it's trying, and it took out this high. So it took out this area right here, and now the leg from, let's see, this leg here. Oh, come on. There's my stick. We have this leg right here. That's the length of that one. Now, if I look and see that, you can see that this move here is going to be longer. So right now this is my impulse move. Now I'm looking for a correction move. So from this area, and we're coming out of the 78%. Now we're heading on up to the 61.8, the 51.8, and this would be near the other end of the move to this side. So now we're trying to find where it goes up, pulls back, goes up, pulls back, goes up. So I'm going to look draw some Fibonacci off of this leg and make it a little different color. I'm going to call this the lower time frame. And as you see, I have different colors here. So right now I'm still looking at the yellow ones. And I'm going to get rid of this. I can get rid of that one. So now I'm going to go to a lower time frame, go to my 15-minute and see where I'm at, see where my moving averages are on the 15-minute chart. Here's the move. You can see now, strong move up, pull back, strong move up. Now this is all in the same pull back. Strong move up, came up to the, it still hasn't quite made the 61.8. But look at my moving averages now. My moving averages are all in the right. Here's my green, here's my yellow, here's my orange. And so all my moving averages are in the correct direction as it went from this move. This was a test. So now we're looking at, so we know where the new direction is going. Crossed over the moving averages. Here's a pullback. Made a new high. So right now, this is where we are right now. It's making new highs, making new lows. I'm just going to slide this thing over. See where my moving averages are. Now I'm going to go to a lower time frame. Go to 5-minute. And you can see, like right now, they're consolidating. But now once it bounces off and crosses over, where's my blue one here? Looking to see where all my moving averages go in the correct direction and starts breaking through these levels. Here's my 61.8. So I want to see the price cross over the moving, get these in the right direction like they did here. Let me just show you what happened. Let's just pretend this stuff isn't here yet. It crossed over my, where's my 62? I need to put another moving average in here, I think. So let's just use this yellow line right now. It crossed over the yellow line. Now all right in here, green, yellow. There's the 200. Oh, actually, this is on a 5-minute chart. This is a 62 here. This has changed colors on it. This is my 62 right here. It crossed over all three of these in the right direction, crossed over, broke through pulled back, broke through the moving averages. They're crossed over. Now, as this thing closes above here, we're looking at this being the next target. Closed up there. Now we're already to the extreme. Wait for the pullback. Now we're at this point, coming over here. Bring this back up. Moving averages are in the wrong direction, so we have to wait. Once they cross back over, once we get these moving averages crossing back over, as it extends up. No, this is not a really good example. This is not the best example here. But bottom line is, as the moving averages are in the right order, that's the green, yellow, in this case would be the white, going in the up direction. As it crosses these points, it closes above this one, this is our target. Closes above this one, this is our target, until we get all the way up until the 61.8. And then further. I'll see if we can find a better example of that. But that's a little bit how you use them a little bit. Is you wait for you get the strong move down, get the crossover, and then wait for it to start retracing into these other areas. Which I kind of like it the other way around here, actually a little bit better, because we're still kind of in a downtrend on the bigger picture. We haven't quite gotten out of that higher time frame zone. Yeah, as this thing crosses over, if it closes above this one, this will be our target. So on the upside, these are all starting to switch over. We'd have to get through this one. But once it gets through this pullback, here's the 20, this is the lower 25% of this move. There's a 23%. Once it gets up into this 38% area, if this candle can come up and close above here, we're looking at this for the target. If it closes above here, we're looking for this to the target. Once it gets past the 61.8, we're done. But if you look at the range from here to there, that's 4 pips. This is where a lot of times my 5 pip target comes in. Comes in, closes, there's my 5 pips. Closes, there's my 5 pips. Closes, there's my 5 pips. It gets up to the 78, which is the upper quarter of this move. We're done. We wait for the next pullback. That's just a little bit of a Fibonacci. I'll see if I can find a little better example as we actually find some of these on the charts. And we're just about done with our session for today.
Yeah, we got 1 minute left.
1 minute left. Any last questions? Let's start looking at some of these ranges of the Fibonacci's. Find the long leg, the long move up, and then look for the retracement. Like in this one here, find the long move up. Look for the retracement. This one retraced it to the 50%. And then wait for the pullback. And then as you pull back, start looking to see what the range between the zones are. Pulls back 50%, it's probably going to come on up to this area. But this is how you can work those ranges, because these numbers have significant value to them. Before we go, let's just, since I don't think anybody's behind us here, let's just look at these that just came up. Here's the Aussie Cad.
Right.
Let's see if there's a chart here, trade here. Aussie Cad. Let's see, this is on a 15-minute chart. Not seeing any zones. This could be interesting. Looks like it has an uptrend. 1, 2, 3. There's one. It's in an uptrend. This could be a nice little trade here, actually. Let's see. How's our Aussie has gotten strong all of a sudden. You can see the Aussie's at the strongest of all 4 time frames. CAD has lost some strength. They're kind of neck and neck here, but this looks like this thing could be starting to switch directions. Here's our arrow. This looks like a pretty much of a classic bounce arrow go on this one. Looks like we have room to the upside. 51 pips. Here's a bounce arrow go. This is a classic one. What do you say, CB? Eva, what do you think?
Yeah, I mean, it did touch earlier, right? It touched the support.
It's doggone close. It's within
I was looking at this one too.
It's within a spread. I think we can take this one as a basic arrow, bounce arrow go. It's a basic strategy.
So it's funny, just for the record, are you on the 15? Yeah. So what's interesting on your chart, you just had that upward arrow. On mine, I have a downward arrow 3 candles prior, right there.
Oh, right here?
Yeah, I have a downward arrow there, and it never touched. So this isn't, a 100% valid bag entry, but I see why you're considering it. For me, I don't know that it really makes much difference. Just interesting that I have a down arrow and you don't.
One thing I like about this one is the Aussie is gaining strength on the Yeah, I'm gonna take this one. I'm gonna be willing to take this one. So I'm going to. There's a bounce arrow. I'm gonna do a. I am liking these. Breakout, sell, trade. Do a buy stop. And then
There's
we're
certainly a lot of room up.
Yeah, there's a lot of room to the upside on this one. It took out the previous day's money zone. Here's the overnight. Here's the overnight high. Here's the money zone right here. It broke out to the upside, came back down, retested. Let me get my moving averages in here. Actually, I kind of like this one. Trade, load. See where my moving averages are. You can see the green, yellow, they're all in the right direction to the upside. This is a standard basic bag entry. I'm gonna go for a little bit more on this one. I can go for the full 20 on this. 20 pips on this would bring us right to. That's right to there. That's like nothing. 20 pips would be somewhere right around here. Let's take a look and see what it looks like on the. See if there's something over in here. Yeah, see we have a nice strong move down. It broke through this candle. Right now there's nothing stopping it to the upside here. I definitely like this one. Yeah, if it can break through this, here's the overnight high right in here. And that's probably well within our 5 pip area if we were looking at just going for 5 pips. There's 7 pips right to the top of that. But I said this, I see all this big move down. This was on a 1 hour chart. Let's see, there's probably, if you look at this candle right in here, you'll probably find something right around in this area. There's going to be a drop. There'll be probably a little bit of a basing. Let me mark that note. I'll be willing to bet there's going to be a little bit of a stall in there somewhere on the lower time frame. Hard to tell with this on this chart. Let's see, Aussie Cad. Let me pull this up real quick on my other one. Let's see, we're looking at a 1 hour chart. Here's the move we were talking about right in this area. I can see if I can draw this. See, the time of this is 21st at 10 o'clock. Let's go. Move this out. Go to 15-minute chart, 21st at 10 o'clock. '21st at up to that. Here's my spot. And but that's all 115. That's on a 15-minute candle. That's a full drop on a 15-minute candle. That's pretty extensive. That must have been an announcement of some sort.
That was when it was that, was that not when it was the CAD news last week? I think many of the different pairs that were paired with CAD did the same thing at that time.
Could be. But now as I bring it back to a 5 minute, so this is so it did stop right here, that no wick at all. It came straight down, no wick at all. So this is all one great big move. But this is if you look at the 50% retracement of that move. Where's my... So from here's the top, here's the bottom, here's the 50%. And I'd be willing to bet it's going to be somewhere. So right now it's right at the 38% retracement. And we had this move down. Shoot the higher time frame on that one. This is where you can see where here's the move down. Now it's looking, now the ultimate move is going to the upside, heading towards this 50% retracement. Strong move down, came back up. Here's the 38, closed above the 38, hit the 60, hit the 50, pulled back. So it did hit that one, came back down. Now your stop would be way down here. Closed above again, hit the 50, came on up here, closed above this. It's probably going to, but now this is, now right now we're at, on this retracement, here's the 50, here's the 62. So right now, after it gets past that 62, now we're looking for another bigger pullback. And so I'd be looking at this area right here. Now we're just waiting for the pullback. And as it pulls back, we'll be looking at it to see if it can make new highs again. But right now, it's just in the retracement mode. I want to see across the moving averages, then come back up, retest it. As we're heading on up to the 38, and we'll do the same thing as we're heading up to the 50, and then as we're heading up to the 61. So right now, I'm just looking at this thing to be trending up and down until it gets all the way up to here. Once it gets up here, but we're going to be moving this moving average to the impulse moves. Now, and so right now, as it's moving its way up, here's the impulse move. Now here's the retracement. Once it gets back to the retracement, once it crosses the moving averages, then we can move this back down again, pull it back up. Let's just say it pulls back to this area, crosses over, comes up to 38, target here, 50, target here, 61, wait for the pullback. And you're just sort of scalping all the way up and all the way back down again. So anyway, that's what we got. Are we in this?
Got one last question for you before we go.
Okay.
What are your thoughts on using Bollinger Bands?
I think they have their merits. I've used them before. I don't generally use them now. Matt's been using them a lot with the indexes, and he's having really good success. I don't have anything against Bollinger Bands. I think there's a value to them. I just haven't. I've used them when I was trading options. I would use the Bollinger Bands. I generally don't do it with these. I'm not saying it's good or bad. I'm just saying I just don't usually use them. But there are people that use them all the time, and they have good success with them. Just not part of my. I try and keep my charts as clean as I possibly can, and the method I use seems to work for me. So I'm not really. I just try not to clutter my charts up too much. You can put enough indicators on, you can never make a decision. So you have to be very careful with that. Try and keep it as simple as possible. The more simple, the more likely you are to be successful. And with that, again, thanks everybody for coming in. Appreciate every one of you. And tomorrow's Tuesday, probably a little bit better day for more volatility. Usually Tuesday, Wednesday, Thursdays are better trading days, all in all. I do like this trade right here, this Aussie Cad, although I do see a little zone that popped in. But yeah, we should be able to get, let's see, we never got into this one yet. This was the Aussie Cad that was off of 15 minutes. Let's see, we're all the way down here. You can get the 15-minute chart here. There we go. You see where it's pulling back quite a bit. It pulled back, but it's okay. We'll just wait and see if it continues to the upside. We do have a little bit of a trend line right here. Keep an eye on it. If it doesn't fit your plan, don't trade it. And with that, again, thanks everybody for being here, and we'll see you tomorrow.